Hi there, and welcome to Safe Option Strategies presentation of Make the Stock Market Work for You. I've got as a subtitle to this presentation, Never Lose Money Again. That's the ultimate way to make the markets work for you. Glad to have you here. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies. I think probably there is a chance if you're listening to this presentation right now, you've probably seen one of my presentations before. Get a lot of people that come back and watch these over and over again as I record them. That's absolutely fine. Glad to have you here. If you're watching one of our presentations for the very first time, let me just give you a real quick introduction. I started Safe Option Strategies back in 2005, and I started it for two main reasons. I started Safe Option Strategies because I had just finished going through $35,000 worth of investment education. And I got to tell you, at the time, a lot of people were doing that. If you remember back in the days of Invest Tools and Optionetics and Teach Me to Trade, and there's probably some others that I'm forgetting. These were $20,000 on the low end to $45,000 on the high end, with all their seminars and all their education and all this different kind of stuff. And one of the reasons I started Safe Option Strategies is because I absolutely hated that people were paying that kind of money to go through education on learning how to do this kind of stuff. The other reason I started it was this. During that time that I was going through this incredibly expensive online education, I learned some things that were working and some things that were not working. I was glad for my experience. Horrified at the cost, but glad for my experience. And through some other individuals that were independent of the company that I was, going through this crazy expensive education with, I was introduced to some methods and some strategies that I then expounded on. I started taking these strategies and doing some different experimenting with them and testing them. And I found a way to trade that can be incredibly low risk and in some cases zero risk. And I know that's a bold statement, but incredibly low risk, sometimes zero risk, and at the same time, very profitable. I started having success. It was actually 2000, 2001 that I was going through the expensive education. By the time I started Safe Option Strategies, I had several years of putting these strategies that I learned and then developed and added to. I had time to put them into practical application and find when they would work and when they wouldn't work and what I could do to make them work all the time. And that was the foundation of Safe Option Strategies. That's how this company came about. The entire reason I do what I do now is to protect people from stuff like this. Now, if you're online with me right now and you're watching this presentation, I'm going to make a couple of educated guesses, okay? I'm going to guess, number one, that you're at least curious about what we're doing. Maybe if you've seen the presentation before, you're curious to see if we're doing anything different than we've been doing. So I'm going to make the assumption, if you're here, some promotional piece or advertising piece that we sent out kind of got your curiosity up enough to click on a link and view this video. So that's the number one assumption I'm going to make. The number two assumption I'm going to make is that you're curious because you want to do better in the stock market, or you want to get into the stock market, and you want to make sure you get in a way that you're not exposed to a lot of risk and don't lose a lot of stuff. You get people that scare you all the time saying, trading stocks and options is risky and you can lose everything you have. And these are legal disclaimers that in some cases they're made to put on there. But you can be actively involved in the market with very little and in some cases zero risk. So those are the assumptions I'm going to make, that something got your curiosity, you wanted to check out what we were doing, and your curiosity was found or based in one of two things. You either want to do better than you're doing right now in the stock market, or you're debating, is it time for me to get into the market or not? Some of you have your money with a broker, and you're looking at what happened during this pandemic, during this horrible situation that we found ourselves in recently, where the market reacted with a 35% drop. And I know it's come back a long ways, but I'll tell you what a lot of people discovered. Some people discovered this back in 2008. Some people have discovered it in fourth quarter of 2018 when we were on pace for a fantastic, phenomenal year in 2018. And all of a sudden, the Fed chair said something that people interpreted as being a little too hawkish, and the markets just tanked, and we ended up negative for 2018 after 3 quarters that were phenomenal. We dropped so much that we ended up negative. Some of you learned it then. Some of you have learned just recently that your broker is no better at this than you could be. If you had all your money with a broker, I'm telling you right now, most of them experienced this same 35% drop. Now, you might have experienced it as well because you're managing your own money. I'm going to show you how to prevent that and how to keep that from happening. And like I said, I know we have come a long way back from that drop. We've managed to go, after dropping 35%, I think we've got somewhere in the neighborhood of 40+% back. Now, when you go down 30%, you need a lot more than 40% to get back just to break even. You know that, right? So almost as difficult as predicting when these drops are going to happen is predicting when the recovery is going to take place and how fast. We started out with kind of a V-shaped recovery, and then that V-shaped recovery has turned more into kind of an L-shaped recovery that sort of slants on its side a little bit. And then in the midst of the recovery, you get these crazy drops in the market suddenly. These little pullbacks like this. This was only 3 days. Look at this area that I just circled right here, or put a box around, I guess. 3 days of heavy pullback. But you remember, one of those days, the Dow Jones Industrial Average was down 1,800 points. 1,800 points in a single day. And days like this can just wipe people out. You're doing so good, you're getting back your money, and then all of a sudden you're taking these big losses, these big ugly losses in these trades you have on. And you feel almost like you're starting from scratch every time there's a little bit of a pullback. On the day that I'm recording this, the market indexes all started out flat to slightly positive territory, and on a news headline, based on nothing more than a news headline that will have little or no effect on the stock market, all of a sudden the Dow Jones sold off and was down 500 points in a matter of a few minutes from being relatively flat, break even. It just all of a sudden collapsed. Now, it's gotten some of it back. It's come back a little ways from how far it's gone down, but not a lot. These are the kind of things that go on a daily and a weekly and a monthly basis, a quarterly basis. These are the kind of things that make trading so difficult. Every time people get involved with some kind of program and some kind of system, inevitably they find out the same thing. This is what they find out every single time. Someone teaches you how to, let me give an example. Someone teaches you how to do credit spreads, and they're saying, I'm going to teach you how to make income. Every single week, you're going to generate income with credit spreads, and you're going to get paid to be in the market and to have your money at work for you. And it all sounds great, and they show you all these trades that they've done that are just absolutely perfect, and they're making them money, and it works right up until the time it doesn't work. I know that sounds a little bit corny. Maybe you've heard that before. It works right up until the time it doesn't work. Someone comes along and says, I'm going to teach you how to make millions of dollars in the stock market, and you're going to use leap-long calls that are in the money, and you're going to be spending half as much or a quarter of as much as you're spending on the stock, and a little move up on the stock is going to make you money, and you're going to do great. And then you get into one of those trades right here, and all of a sudden it does this, and you've taken a bigger loss than the profit you were targeting originally. And it seems like it's in the blink of an eye. And so many of these programs that are out there work right up until the time they don't work. And when they don't work, people get clobbered. And then you get remorseful and regretful, and you get frustrated, you get down on yourself. Tell me if this is not describing what you've been through. This is mainly for people who have bought other programs and invested in other education. You get frustrated. You're like, I'll never do that again. Wow, what a waste of money. I can't believe I spent my money on that. And you go through these emotions and you feel ripped off. Let me get something out of the way before I go any farther in this presentation, because we're going to cover a pretty good amount of information. I'm going to try really hard to keep this to a reasonable amount of time. Let me cover something right now. I absolutely wish that I could turn back the clock for you, not for me. I wish I could turn back the clock for you and have Safe Option Strategies be the first company that you ever decided you would take a chance and spend some money and learn some strategies and learn how to make more money in the stock market and learn how to be better protected. I wish I could just turn that clock back, get back every penny for you that you've ever spent on other education companies so that you could start with Safe Option Strategies. And I wish I could do that for you for two reasons. Number one, to save you the money you feel like you've wasted. And number two, because I guarantee you would never feel the need to go out and spend money on investment education somewhere else again. Okay, I got to tell you, I know some of you are listening to this presentation and you are hopeful that I'm going to share with you in the next 30 or 40 minutes some magic formula that you're going to be able to watch this video, maybe watch it a second time, which, by the way, you're welcome to do. And I'm going to unlock for you in this free video all the secrets and all the strategies and everything you need to be forever profitable in the market, to never lose money again, like our little tagline says, and just life will be perfect from this point forward. I know some of you are hoping for that, and I'm sorry to disappoint you, but I'm not here on this presentation right now to give away all of our secrets and to share with you all of our strategies and all of our methods. That's not what I'm here to do. And I'd rather tell you that and be honest with you. I'd rather set the stage from right now. If this is the first time you're ever hearing me, I'd rather set the stage of you starting to feel like you can trust me, because I'm just being brutally honest with you right up front. It costs money to do our program. At the end of this presentation, I'm going to give you, I hate to call it a sales pitch, but I'm going to tell you about our program. I'm going to tell you about our program, and I'm going to tell you why I think you should spend a little bit of money and participate in the Safe Option Strategies program. I'm going to give you some hard evidence as to how it works and why it works. But what we're doing is not for free. I want to work with people who are serious about making money in the market, who are willing to invest in themselves. I'm sorry if you've lost money with other companies that you've been with before. I wish I could get that back for you. But I can tell you, if I show you enough in this presentation, if I show you enough to get you to take a serious look and give some serious consideration to what we're doing, I promise you, you will never need to go through this process again. We will teach you everything you need to be a consistent, successful, profitable trader in the market, and never have to go through the process of spending money on investment education again, and never lose sleep at night wondering what might happen when the market opens up tomorrow, what might happen when the market opens up while you're away from it and you can't be there to quickly do something different in your portfolio. You're never going to lose sleep wondering if you're going to lose money. I can help you do that. And I'll tell you, relative to a lot of what's out there, relative to most of what's out there, our education is quite inexpensive, but that doesn't mean it's cheap. There's a big, huge difference. Compared to our competitors, we're very inexpensive, but we're not cheap, nor do we want to be. I got to be honest with you. I love people who are frugal. My wife is very frugal. She's a saver. She's smart with money in terms of like our home finances. I love people like that. I don't want to work with people who are cheap. I really don't. I don't want to work with people that are looking for something for nothing. Folks, I know some of you are going to turn off the presentation and not listen to it because what I'm about to say, you're probably going to be offended by. That's not my intention. My intention is not to be offensive. My intention is to be honest with you. If you are looking for something for nothing, you will get exactly what you pay for. Okay, you should know that. But if you're looking for something for nothing, you are going to get exactly what you pay for. If you are willing to make a small investment in yourself, I will help you make back the money you spend on this program, and I will help you be profitable. And if I cannot do that, I will give you your money back, no questions asked. Nobody in this industry offers a more rock solid, unconditional guarantee for your success than we do. So if you want to take the next 30, 40 minutes to look close at what we're doing and how we're doing it, and then ask some questions or check us out a little bit and investigate us a little bit and see if what we're doing is going to be a good fit for what you want to do, then we've got something to talk about. And I hope that's the case. Now, if you don't want to do that, you're still welcome to listen. I think you will learn some things here that will be beneficial and be helpful to you. It's not going to be all the magic. It's not going to be the whole secret sauce or the whole secret recipe, but I still think you can go away from this having learned some things that will be beneficial to you. So keep that in mind as well. Here's what we're going to cover in the next, I'm going to keep this to 45 minutes or less from this point forward so that the whole presentation is an hour or less. How to learn and profit at the same time. That's very critical that you understand there is a way to learn what we're doing, but still make money at the same time. One of the keys to doing that is first learning how to be right 75% of the time as you're picking stocks and as you're picking trades and strategies and making the decisions that you're making. You got to be able, you need to be able to be right about 75% of the time. This is not a Las Vegas type setup. This is not a situation where you're going and playing the roulette table and you're just going to play black and red. And every time you roll, or every time that wheel spins and they put that little ball in the wheel, it's either going to come up red or it's going to come up green. This is not a red or black. This is not a 50-50 type thing. You've got to learn to be right 75% of the time if you want to survive in the market. I'm going to teach you an easy way to do that. More important than that, you need to learn what to do the other 25% of the time. Because I've had multiple conversations with people who they tell me that they are making money on 80% of their trades or 90% of their trades or 95% of their trades. And yet overall they're losing money because that 10 or 15 or 20 or 25% of the ones they're losing on, they're taking a beating on those trades. And it's costing them their portfolio. It's costing them all of their profits and then some. Figure out how to be right 75% of the time in the market, or 80 or 90, and then learn how to fix the other 25% of the trades that go against you. And that's one of the biggest keys to being profitable. I'm going to show you a little insight into how to do that and why that's so important. And then I'm going to show you how to trade risk-free. I know that's a bold statement to make. I'm going to show you 4 or 5 trades that you could be in right now today. They're 100% risk-free. No possibility that you can lose money, at least for a period of time. I'll show it to you. I'll show you the numbers. I'll prove it. Now, if you've watched one of my presentations before, you may know already that I'm going in the exact opposite order of what I normally do. Usually, I save this part for the very end of the presentation, but let me tell you why I decided to put this at the front of the presentation. Because before you spend any more time with me right now, you need to understand that one of the things we have gotten so good at Safe Option Strategies, and I know I sound like I'm bragging when I say that, I realize that, but one of the things that we've really gotten good at Safe Option Strategies is teaching people how to do all of the stuff we do, but making it possible for them to make money and profit from day one. Literally from the day you join our program, you can start placing trades and start earning money and getting profitable right away. Very few places make it possible for you to do that. Many of you have heard this before. You've heard this saying, if you're probably if you're over 20 years old, you've heard it dozens of times. If you're in your 30s, it's hundreds of times. And if you're like me, you've heard it thousands of times in your life. Feed a man a fish and you feed him for a day. Teach a man to fish and you feed him for life. I love that saying. I have always loved that saying. I think it's smart. I'm a big believer in education. I preached it to my kids until they're probably sick of me saying it. I'm a huge believer in learning how to do things so that you never have to rely on somebody else. But there's a problem. There's one little problem with this saying, and this is critical to really wrap your mind around this and understand this. I've got two really good friends who fish a lot, and they're really good at it. I mean, I've been fishing with them on lakes. I've been fishing with them in the ocean. I've been fishing with them on rivers. I mean, you name it. I've gone with them about 1/10 the amount of time or 1/100th the amount of times that they go, but I have gone with them enough to know that wherever they're at, they know how to fish. They know how to catch fish. Now, I go with them occasionally and I duplicate what they're doing. I watch how they set the hook from the weights and from the bobbin if they're using one of those, and I watch where they put the bait and how they put the bait and what kind of, and they tell me what kind of bait to use, and that's great. And if they didn't, I would be lost probably. And I watch where they're casting to, and I watch how they kind of tug on the line to set the hook, and I watch all of this stuff, and they coach me as I'm doing it. And I still don't pull out as many fish as they do. There is a lot of what they do that just comes through experience. They just have to do it enough to get good at it. There's a difference between knowing that when the fish has its mouth around the bait, you've got to pull that hook to set it. If you don't pull that hook and give a good tug on the line, it's not going to set the hook for that fish. But I've got my hook out there in the water, and I think I feel a little bit of nibble, and I try and set that hook, and I find out that it was just the current of the water moving things around a little bit, and I sort of misinterpreted what I thought was a nibble, or I mistake a nibble for a hard bite on that hook. And I just haven't done it enough times to really have it figured out and really know as well as they do. So here's what and that's okay. They're teaching me, and I'm learning, and I'm getting better. But here's what I've always thought about this saying, or at least for a long time, this is what I've thought about that saying. If I ever had to go out in the wilderness by myself and rely on my ability to fish, to feed myself and stay alive, I would starve to death. I'm just not good enough to do it the way they're doing it. So what I've always believed is this. It's great to learn how to fish. But what if you starve in the process and you need to be fed while you're learning how to fish? And I have taken this philosophy and I have put it at the core of everything we do at Safe Option Strategies. From day one, we start teaching you how to fish, but from day one, we start feeding you. We start giving you trades that you can place, even if you don't understand them, even if you don't understand everything about why we're doing this trade and the timing and the reason. That's okay. We teach all of that. We teach things from the very most basic levels. Getting started in the stock market, what fundamental and technical analysis are, how to interpret corporate earnings and sentiment analysis and things like that. We go through all sorts of different option strategies, debit spreads, credit spreads, collar trading, advanced complex spread trade. We teach you all of this, how to manage a portfolio. All of this is taught in our education. We've got upwards of 60 classes and courses that teach you all of this stuff. But from day one, we start sending out trades to you. We send you out a trade that we give a detailed explanation of. Here's how the trade is set up. This is the option that you're buying. This is the option that you're selling. This is the stock that you're buying. This is why we're doing this trade and why we think this is a good trade to be in. Here's another trade we're doing this week, or maybe a slightly different trade for someone who has a little more risk tolerance or willing to go out on a limb a little bit more. It's time to adjust a trade. We've got a trade going against us. We're not going to take a loss on this trade. We're going to do something different to make this trade work for us in spite of that. We start sending you all of this stuff from day one, and we walk you through every single step of it. Every morning during the week, we get online with you. I'm going to come back to this screen in just a minute. I'm going to skip ahead. Every week, or every day, every day, we get online with you and we do a live trading class. Now, a lot of people cannot attend that class when it's live because their schedule doesn't match up, but it gets recorded and it gets put on the website immediately. So there's an archive of all these classes. They're all right there for you to go through when you have time. A lot of our students don't have time during the day to watch the market, but they know they want to be involved in the market. It's just not feasible for them to do. Let me go back to this screen really quickly. This is for last year, and we're on pace to do even better. In spite of what happened with this COVID-19 pullback, we're on pace to do even better this year. There's no guarantee we will, but we're on pace to do it. Last year, we produced a 92% return for our students on the trades that we sent out to them. If a student of ours would have joined our program and simply copycatted us, now this is feeding a man a fish, no question about it. This is feeding a man a fish. If they would have just got in with us and copied every single trade we did from day one, they could have been up 92% in their portfolio last year. Everyone was ecstatic about how good the NASDAQ did last year, and it finished up 35%. We crushed it. We absolutely, unequivocally crushed it. And these trades that I've got highlighted right here, this trade should have been a loss. We adjusted it to profitability. This trade should have been a 75 or 80% loss. We only lost 26%. This trade should have been over a 50% loss. We only lost 13%. I'm going to show you how we do this in just a second. This trade should have been about a 45, 50% loss. We adjusted it to getting only a 5% loss. We lose money on trades once in a while, or we adjust them back to break even or to a very, very small profit. And I don't even keep track of how many of my trades were profitable versus how many of them lost. This is the bottom line to me. The bottom line to me is how profitable can I be in my portfolio? Here's where we're at. I'm going to go into, I'll bring this screen on again and show you a little bit more about this at the end of the presentation. This is how we're stacking up so far this year. The NASDAQ has moved into positive territory. The Dow and the S&P are still negative on the year. After that big, huge pullback from the COVID virus thing and the economy shutting down, they've come back a long ways, but they're both still down. We're up 62%. If you had just been with our program since the first of the year and just copycatted and followed every single trade we had placed, we're up 62% on the year. This is not get rich quick stuff. This isn't taking $2,000 and turning it into $2 million in a couple of years. That's a bunch of baloney. The people that are out there peddling that kind of stuff, they're lying to you. They're stealing your money from you. These are real results. I can show you every single trade we've done since the first of the year to prove that and back that up. These are the trades that we're feeding you with. But at the same time, we're teaching you how to fish. All right. Here's how it all starts. What I'm going to do now, I've given you an overview of how we teach people at Safe Option Strategies and how we make this such an effective education. Let me give you a glimpse into what it is we teach. This is just a little, this is the tip of the iceberg on what we teach. Number one, we teach you how to be right 75% of the time. Okay. When I set up my stock charts, I have this picture of the stock chart that you saw earlier in the presentation, and I like it to look a certain way. I like to have my 5 and 20-day moving averages, and I like to have my RSI, and I like it to look a certain way. When I go to set all this up, there's a little drop down. This is on stockcharts.com, by the way. You don't have to use them. It's just a company that I like to use. I have all these different things. All I wanted to do was select exponential moving averages for right here and right here. And I had my choice between Kaufman's moving averages, simple moving average envelopes, events, parabolic SARs, chandelier exit, pivot points, price, zigzag, horizontal lines, Ikimoku cloud. You know what an Ikimoku cloud is? Some of you do. I don't care. It's irrelevant to me. This is just a small amount of everything I could do. I went to change some of these items down here, and this is what I pulled up. Accumulation distribution line, Arun oscillators, Bollinger Bands, commodity channel index, Chaikin money flow, detrended prices, money flow index. I'm just highlighting a few of these. Price performance, price up down pair, price momentum, rate of change, SCTR. Folks, do you realize there are over 100,000 different ways you could combine all these different indicators to set up a chart? Over 100,000. And do you know what that causes for a lot of people? Anxiety and paralysis by analysis. If you want to learn how to be right 75% of the time in your trading, you're going to start looking at the RSI, the 5 and 20 day exponential moving averages, and the MACD. Not because those magical formulas are always perfect at picking the price of a stock and picking the direction of the stock. They are not. But historically, when all three of them give a technical crossover in the same direction, relatively close to the same time. It's not always going to be on the same day, sometimes 2-3 days apart, sometimes a little bit more. But when they all give a technical crossover around the same time, up or down, historically 75% of the time, you have the stock trend in that direction. Not just a change for a day, not just a change for a couple of days, an actual trend change that lasts for more than a couple of weeks or more than a couple of percent or both. 75% of the time, you get a couple percent, a couple weeks, or both when you get these crossing over at the same time. Occasionally, 25% of the time, historically, it doesn't happen. 25% of the time, you get all three crossing over in the same direction at the same time, and you don't get 2 weeks or 2% or an actual trend change. Here's an example right here. Crossover, crossover. This one came a little bit early, crossover, and in just a week, it reversed. That's that 25% of the time. If you want to be right, and here's the reason this is right 75% of the time. It's not just historical. Here's the reason it's going to continue to do that. Because 95% of all investors and traders, including the hedge fund managers and the brokers and the people that you think are the so-called experts, this is what they do. They look at the same thing. And when they see these indicators and they move big chunks of money, this is what they get. I love this ad for these two guys that are on, they're regulars on CNBC, and I'm sure they're smart guys. And I'm not saying this I'm not saying this is a negative thing, but you know, they're selling this book and they have this whole expensive trading program and everything, and they're like, follow the big money. You know, we have the secret insight to where big money is putting their money, and they know everything that you don't. No, they don't. You know, most brokers sit at their desk and look at the exact same thing that you can pull up on a computer yourself. You know, that's what most broker dealers do. And just because a big company like Goldman Sachs or JP Morgan Chase is going to put millions of dollars into a stock at a certain time, and they have special paperwork that they have to file with the SEC in advance, that doesn't guarantee the stock's going to move that way. They have to place that trade a couple weeks before it executes, and they have just as good a chance of getting burned on that as you do. And then we sit here and pretend, ooh, they have some kind of secret inside knowledge that none of us regular people are privy to. What a load of garbage that is. With the internet and with the modern technology, we've got access to the same stuff they have access to. And they look at these indicators and they trade based on these indicators. And if we do the same thing, we're going to be right 75% of the time. Now, that's important, but I'll tell you what's more important. Oh, I forgot to bring on my favorite acronym. Keep it simple. RSI, 5 and 20 day moving average, MACD. Stick with those three indicators. Now, those aren't the only things we look at. Let me make this very clear. We look at levels of support and resistance. We look at earnings reports. We look at volume of purchases and sell. We look at all of this stuff, but we start out with these three things and keep it very simple, and we're right more than 75% of the time. Now, as important as that is, what to do the other 25% of the time may be the most critical thing you will ever learn if you want to be a consistently profitable trader in today's markets. You have got to know what to do that other 25% of the time, because this is what happens to people over and over again. They place a trade. They make a nice little profit on the trade. They take that profit, they add it to what they started with, so their next trade is their profit plus their principal. And then they repeat that and they do it again, and then they repeat that and do it again. And then the one trade comes along and they were wrong. And that thing turned on them, and this is more, what's the way I'm trying to say this? This is easier to be at a sudden instant loss like this when you're trading options. When you're just trading stock, you can be wrong and maybe you're going to be down 3, 4, 5, even 10%. And most of the time you can kind of survive that. You can kind of live through that. If you're trading options in any way, shape, or form, a little move against you, and you can suddenly be staring at a 50% loss in the blink of an eye. And all of a sudden, 75%, 1, 2, 3 out of 4, 75% went exactly the way you wanted them to go, but you're sitting at a 13% loss. People experience this over and over again. Of all the conversations I've had over all the years I've been teaching this to people, this is the most common conversation I've had with people. Yeah, I'm picking good companies most of the time. Most of the time I am. Most of the time my trades are making money. Most of my trades are good. I think I have a good handle on what I'm doing because most of it's working. Well, only question I have for you is, are you making money or are you losing money? And tragically, more often than not, they're losing money. We teach you at Safe Option Strategies how to plan your trade, how to plan your exits, how to plan your backup. Every trade you place has to have a backup. We refer to it as an adjustment strategy. When you learn how to adjust trades, everything is going to be different for you. Let me give you a couple of quick examples. We entered a trade on Amazon not too long ago, this a couple months ago. We entered a trade on Amazon, and after we got into the trade, we saw some indicators that we liked, and we saw some things that we liked, and we got a couple of days of upward movement, and our trade was looking good. And all of a sudden, one day, this trade sold off. And in that big sell-off that this trade had, we were suddenly negative. If we had been using a stop loss, in that trade, we would have lost money on that trade. Okay, we had a very bullish trade set up for Amazon. You notice just a couple months ago, Amazon was under $2,500, and I think now it's over $3,000. Where's Amazon? $3,100 right now a share. We were doing this a couple months ago when it was $2,500. Okay, fantastic option trade. We didn't have to have $2,500. We did a fantastic option trade. We would have been triggered out with a stop loss on this day right here. Because we had an adjustment strategy, and let me go back here real quick. That's what oftentimes happens to people when they get triggered out. Sometimes it's because they have a stop loss in place and they're getting killed by that stop loss. Because we had an adjustment strategy that we knew we would employ if we would have got a technical crossover on the RSI, if the 5 and 20-day moving averages would have crossed over, and I don't have it on the bottom of the screen here, but if the MACD would have crossed over, then we would have gone to our adjustment. We weren't worried about that pullback. Our trade went in the negative, and about 4 days later, it closed out with this full target profit that we were after. Okay, that's one example. Here's a better example. We got into a trade on Zoom several months ago, and Zoom, we got into the trade back here, and then it crashed on us. And we got all three of those technical crossovers, and we had to adjust the trade. And then the stinking thing reversed and crossed back over to the other side. And you know what we had to do? We had to make a second adjustment to it. But we didn't panic and sell out right here for a loss. We didn't panic and get out right here for a loss because now it was going against the adjustment we had made. Instead, we went to our next adjustment, and we were in the trade a little bit longer than I wanted to be. I was hopeful to be in the trade 2, maybe 3 weeks. We were in about 6 weeks, and we got out with a really nice profit. And by the way, Zoom is up trading now, I think, over $260 a share. It's had a nice little run since here as well. These adjustment strategies saved us from losing any money. Okay? When you learn how to, and let me give you one example of an adjustment. Some of you know what a bull call spread is. Let's say you went out on Zoom and you liked what this was doing and you placed a bull call spread. You went out a couple months in time and you bought a long call, and at the same expiration date, higher strike price, you sold a short call, and you've got a long call and a short call with this being the lower strike price, this being the higher strike price. And if that stock continues to move to the upside, you've got a nice profit that you've built in there that you can make, okay? An example of an adjustment is we're in this bull call spread, and before we get to a target profit, we actually have the stock turn on us and move to the downside, and we get technical crossovers, and it's moving down. An example of adjustment would be knowing when and where to roll that short call and move it into a nearer term expiration, maybe the same strike price as a long call, maybe slightly higher, maybe slightly lower, but we're turning the direction of the trade to match the new direction of the stock. We teach you how to do all of this. And then when the time comes, if it reverses, we can adjust it back the other way, or we continue to adjust, and maybe we eventually end up in a bear call spread if this continues down. And we take a trade that would have lost 20, 30, 40%, and we turn it into a break-even trade, or maybe a real teeny tiny loss relative to what it could have been. When you start learning how to adjust trades, you get the same scenario, but here's the difference. Because it was set up correctly, and because you knew how to make an adjustment and when to make an adjustment, even if you didn't make profit on it, you just got it back to a zero loss or a very small loss, and the difference is staggering. Instead of being down 13%, these same 4 trades are up almost 60% because we didn't give it all away on one ugly, awful, horrible trade that we couldn't adjust. Folks, you've got to learn to adjust trades if you want to survive today's market. And that is one of the core, in fact, it's the core of everything we teach at Safe Option Strategies. The core is how and when to adjust trades. And we've gotten really good at it. How do you trade with zero risk? Okay, I got to hurry because I've got less than 15 minutes to wrap all of this up to be respectful of your time. How to trade with zero risk, all right? Trading with zero risk involves stock and options used in conjunction with each other. We're going to own some shares of stock, and we're going to use a long put option like an insurance policy. Now, if you want to pause and read through all of this, go ahead and read through all of this. The long put option can be used almost exactly like an insurance policy is. If we buy a stock, we have 100% of that at risk. If we went out and bought a stock for $100 a share, 100% of that is at risk. Theoretically, that stock could go all the way down to zero. If we buy a long put at the strike price closest to where our stock is, we are protected from any loss below that. We're going to pay a premium, just like with an insurance policy. And if the stock goes down, our long put simultaneously goes up in value. Think about an insurance policy. You go out and buy a Tesla automobile. I think the Tesla Model X sells for $85,000 or $90,000. I don't know if that's with all the bells and whistles, but I think a stripped down model Tesla comes with a lot of bells and whistles. So you go out and buy a Tesla. I guarantee whether you pay cash for that car or whether you finance it and the bank is holding the title, you're going to get insurance for that car because you're not going to let an $85,000 car get dinged by someone who then drives away and leaves you hanging. You're going to have insurance on it. You're going to pay a premium for that insurance. It's going to cover the car at a certain price. It's going to cover it for a certain period of time. And when that time expires, you renew the insurance policy. Most of this is done for us automatically through our insurance companies. That's fine. But it works almost the same way. You go out and buy a stock. You buy a long put option that expires after a certain amount of time. You pay a premium for it. And if something happens to your car, I mean your stock, you're covered. You've got an insurance policy on it. Okay? Using a long put option as an insurance policy and then adding a covered call. Now, I'm not going to take time in this presentation to explain to you what a covered call is. You get a credit for writing a short call with your stock. Most of you probably know how to do that. If not, I promise you it's part of what we teach in the program. Okay? When you combine your stock, your long put, and your short call, you have a trade referred to as a collar trade. Okay? And collar trades can be set up for zero risk. Snap is the ticker symbol for the company Snap Incorporated that owns Snapchat, the very popular and becoming more and more popular social media program. All of my kids use Snapchat. I've got 4 kids. One of them is a teenager. The other 3 are adults. They all use Snapchat. All their friends use Snapchat. So guess what? If my wife and I want to have much contact with our kids, we've had to learn to use Snapchat a little bit. If I went out and bought 100 shares of Snapchat right now today, I would pay somewhere in the neighborhood of $26.45 a share. If I wanted to protect myself from any possible loss in this position, I could get a $26.50 strike price long put. That's the price at which I have the right to sell my stock, and that's going to cost me $2.52. But then I can go out and sell a 30 strike short call that pays me $2.92. And the net result of all of that is a total cost of $26.05. I probably don't need to put on these marks because I think I've got the automatic ones coming in here. From now until the time my option expires, I have zero risk in this position because my total cost to be in the position is $26.05. And I have an insurance policy that lets me sell everything at $26.50. There is no possible way that I can lose money on this trade before the expiration of that long put. Just like with my insurance policy, if I get to that expiration date, I may have to renew it and get a new policy. Do you know why I set this up to go to August 7th? Because on July 21st, Snapchat reports their earnings. And all I want to do is make sure I'm very well protected for a couple of weeks past their earnings report in case their numbers are bad and they go way down. Guess what? JP Morgan, JPM, ticker symbol for JP Morgan Chase, they report their earnings next week. I could get into shares of JP Morgan and have zero risk in that trade until I find out what happens following their earnings report, and then I can decide what to do after that. Bank of America reports next week. Stock's only $23.11 right now. I can have it protected at 23 with a long put and have my total cost be only $22.95, zero risk. Netflix, there's an expensive stock for you. Not like Amazon, but still a pretty good price stock. Trading at $504.99 right now. I can protect it at $505 and have a total cost less than that and have zero risk. And guess what? They report their earnings next week. Do you see a pattern forming here? Okay, it is easy, and I can teach you how to do it. It is easy to set up trades that have zero risk in them. And you can still build them to where they have a little bit of profit in them. But let me show you where the real profit comes. Have you heard of something called cost averaging or dollar cost averaging? A lot of people do this. They buy a stock. The price of the stock goes down. They buy another share of stock at that lower price. Price of the stock keeps going down. They buy another share at that lower price. And now they have one share at $100 and one share at $70 and one share at $50. And if my math is correct, I believe that would be a total of $220 now that they have. One at 100, one at 70, one at 50, $220. And you divide $220, divide it by those 3 shares, and the average price per share is $73.33. Now, this is a great way to trade, and it works very well, and I would never, ever recommend to anyone that they don't do this if they have the money. But do you know what the flaw is in that strategy? Do you know what makes that really hard? What if I'm doing this times 10 shares or 100 shares? Now I've got 10,000, and to make that work, I've got to come up with another $7,000 for those next 100 shares. And then I've got to come up with another $5,000 for those next 100 shares. And the problem is, in the process of trying to dollar cost average down, you could run out of money. And people often do. When you add in that long put and short call option, when that stock goes down and the value of your long put goes up, you sell the long put and you use the money you bring in right here to add shares of stock to your position. So you're adding shares at no added investment. Think about that scenario I just went through. You buy some shares at 100, you buy some more shares at 70, you buy some more shares at 50. What if those shares at 70 and those shares at 50 didn't cost you anything? Because you had money from long puts that were paying for them. Now, when the stock begins to go back up, you don't have to get back up here to $73.33. You're profitable at $50 and a penny, or at $51 you're profitable. And if that stock ever gets back up to 100 where you originally bought it, you're profitable by a really big, huge margin. Now let me show you. I've got less than 10 minutes left. Let me show you exactly how this works. Student of mine a few years ago, 3 years and 3 months to be exact, and I had this conversation with him just the other day. I was ecstatic to have this conversation with him. And I knew that over the last few years, he had been trading Snap. That's one of the ones I was just talking to you about. I knew he had been trading Snap because he bought Snap on the day of their IPO when the stock was at $24 a share. They opened at 17. In the blink of an eye at the open, they went to $29.44. And before the day was over, they had closed. Before the day was over, this stock had actually closed down around $24 a share. He got in at 24. That's better than having to pay 29, but not nearly as good as 17. And then for the next 5-6 months, he just watched in horror. This wasn't a huge investment. 300 shares at $24 a share wasn't a big, huge investment. But for this individual, it was all he had. He put it all on the line. This was when he contacted me, and his $24 per share investment had dropped all the way. It got a little worse after he contacted me. It got all the way to 11. He had lost over 50% of it. At the time he reached out to me, he was down almost 50%. I think it was down around 13. He had lost $11 a share on a $24 a share investment. And then just a week after that, it was down 50%. And a week after that, it was down more than 50%. Now, we immediately started teaching him how to collar trade, and we got his trade protected. And through this period of time, he made a little money, got a little money back, protected, got a little money back, protected, got a little money back, protected. And then they had an earnings report at the end of January, first part of February of 2018, and they had a nice little jump way to the upside. And he was ecstatic. He's like, okay, I'm getting some of my money back. Didn't get all the way back up to 24 where he got in, but he was getting some of his money back. And he was very pleased with that. And then after this great earnings report where things took off to the upside, all of a sudden for a couple of weeks, it started to drop, looked like it was going to come back a little bit, again, started to drop. And guess what he got right there? All three technical indicators suggesting that there was going to be more of a downward trend. And guess what he did? He collar traded this company. He got the long puts in place. He got the short calls in place. And when the stock dropped, got all the way back down under 11 again, lower than it had gotten before, but it started to climb back up. And when he got technical crossovers going the other way, he had enough money from the long puts. Did not have to add anything to his original $7,200. He didn't have to add anything. And short calls had paid for all his long puts up to this. But now he had enough money to add 100 shares to his position. He went from 300 to 400. Guess what happened when he got technical crossovers to the downside again? He got that thing protected in a collar, and it went way down. It got down lower than $5 a share at one point in time. But when he got the technical crossovers, it was back up here around $5.75. He waited for those technical crossovers. He added 500 more shares right here with no added investment. Folks, he went from 300 shares plus 100 made it 400, plus another 5 made it 900 shares. And you know, when the stock got back up to here, look at this, 900 shares. Now by this time, he had been in this trade for a little over 2 years. And he was hating life right here. He'd lost half his money. And even though it hadn't gotten any worse during this period of time, he hadn't made a lot of profit. There was a little bit of profit from some long puts. Hadn't been a lot of profit, but it didn't get any worse than where it was when I met him. And 2 years into this, when he was still $6 per share lower than where he had gotten in, he was 125% profitable. He had taken that $7,200 and made a profit of $9,000 on it. Now it started getting exciting. He added some long puts and he got a little head fake here. He lost a little bit of money here, and he made it back right here and just kind of stayed neutral right here. Saw the thing go back up. And guess what happened just before the COVID-19 thing? Just before the COVID-19 thing hit and everything tailed off, he put a collar trade on it ahead of earnings just in case. Had it collared right up here, got an ugly dip after earnings, and then it started to rebound a little bit, and before it could, the COVID-19 thing hit and it tumbled. But when he got technical crossovers to the upside, guess what he did? He added 400 more shares for no added investment. That's the key to all of this. No added investment. And based on where Snap finished yesterday, look really close at this, folks. This is what we will teach you how to do at Safe Option Strategies. He's been in this trade for a little over 3 years. He suffered through the first 6 months of that, really stressed out about where it was going. I mean, really stressed out about it. And 3 years and 3 months into it, he's up 376%. I've got to wrap up really quickly here because I really have a desire to keep this at an hour. This is what we'll teach you how to do, folks. Again, you can pause the screen and look at the numbers on this. This is one that we sent out to all of our students and traded for a period of about 3 years, and we're over 200% over 3 years. Folks, you know that's an average of about around 70% a year, right around 70% a year. If you're already getting more than 70% a year, we got nothing for you. If you're not, you better take a close look at what we're doing. Let me wrap this up really quickly. We have a collar trade course and we have a spread trade course. And we've got the numbers to back up that what we are doing works. It is not a get-rich-quick thing by any stretch of the imagination. And I told you at the beginning of this presentation, so you knew this getting to the end part of this. You knew, compared to other programs, we are quite inexpensive, but I do not claim to have a cheap education program. If you wanted to do the collar trade course only, $1,500 for an annual membership, $2,500 for a lifetime membership. The spread trade course only, $2,000 annual, $3,000 lifetime. Combine them together, $3,000 annual, $5,000 lifetime. But don't turn this off. If you're a little bit sticker shocked, then you haven't looked at other education. And I can't do a lot about that. I know some of you might be looking at this and you were hopeful that I'd get to the end and you'd find out that it was, $100. Sorry. I'm sorry to disappoint you. I told you it's not a cheap program. You want to go out and buy a $100 program, that's what you're going to get. You're going to get a program that's worth $100 and not a penny more. I think ours is worth 10 times what this price is, but I don't believe in charging people that. However, we're running a really nice promotion for the month of July. All you need to do when I end this class in just a few seconds here, all you need to do is scroll down below. You can see this is where you're at right now up here listening to this. All you need to do is scroll down below, fill this out, and hit submit, and you will be redirected to a page that has our July promotional pricing on it, okay? When you get to that page, I would very strongly encourage you, and we're doing a nice discount on all these prices. They're nicely discounted through the month of July, but only for those people who will follow up, have some conversation with us, trade some emails with us. I'm not going to try and talk anybody into this. I am only going to answer your questions. We have a shorter term discount that is going to blow you away on these prices. A lot deeper than just our standard July prices, but it is only reserved for those people who act quickly. If you want to know what the 24-hour discount is, put somewhere in here that you're interested in the 24-hour discount, and I will send you details on that. And I will answer any questions you have. I will spend as much time on the phone with you as you would like. I will trade emails. I'm only going to call if you leave a number. You do not have to leave a phone number. You can make up a name if you want. You have to put a valid email address or we can't send anything to you. You do not have to leave a phone number. You do not have to leave a message. If you put a valid phone number in here, I will call you and I will answer any questions you have. And I will not try and talk you into our program. I will simply answer your questions for you. Nothing more, nothing less. That's all I have a goal to do, is answer your questions for you. Okay? Fill out that form, or you're welcome to call us. We have a toll-free number. And if I don't answer or someone else here doesn't answer right when you call, we will call you back. Folks, I went about a minute over 1 hour. I hope you learned something from this. Let me end with this. I have been making this work for myself and for thousands of people around the country and around the world for over 15 years now. Folks, I know what I'm doing. I know how to teach it. I know how to help you make money. I know that for you to spend a penny with me means that you have to trust me. And that's hard when you've never met me. You've had 1 hour of listening to my voice, and you should be asking yourself, can I trust this guy? I will tell you this. Number one, I'll get on the phone with you or trade you emails, and you can ask me any questions you want to. And I will just be brutally honest with you with my answers. I'll give you as much information as I can. I'll be truthful with you. I will not try to pull the wool over your eyes, and I will not try to talk you into this. I will also tell you this. No one in this industry has a better guarantee than we have. If you decide you're going to step out on a limb and trust us to teach this stuff to you, I guarantee I will help you make the money back that you spend on the program, and I guarantee that I will help you be profitable, or I will give you your money back. And I put that in writing for you, and I honor it. And I can honor it because I can count on one hand the number of times in 15 years that I've had to give someone their money back. And in all of those instances, it had nothing to do with helping them make money. They had a change of heart, or they had a life circumstance that happened. One gentleman lost his spouse a week after getting into this, and I know he was being sincere, and I know he was being truthful, and I didn't ask him any questions. I gave him his money back. Now, that's an extreme scenario, I know. But one person did the program, and they were struggling with it, and I was struggling teaching them. And this is a person who in their field was absolutely brilliant. In stocks and options, they were not brilliant, and they were genuinely having a hard time learning this. And guess what? I couldn't teach it to them. I gave them their money back. Less than 5 times in 15 years has anyone even asked me for their money back. That's why I can give a guarantee like that. I know I can help you be incredibly profitable in the market. I appreciate your time. I genuinely hope that I hear from you. Filling out that form is not obligating you to buy anything from me. It just means that I'll share with you where our discounts are, and I'll make you a really incredible 24-hour offer. The reason I do 24 hours is because I like working with people who are serious, and I'm not a fan of working with people who are indecisive. I will bend over backwards to answer your questions and have conversations with you so that you can get your questions answered in 24 hours. You can do your due diligence in 24 hours. I make a really deep discounted offer because I want to work with people who are serious about this and who are willing to get their questions answered and who are willing to do their due diligence. And to survive in the stock market, you have to be decisive. And if you want 2 or 3 or 4 or 5 or 6 weeks to think about it, that's great. You can take advantage of whatever discount I have going at that time, but you won't get that special 24-hour discount. I hope to hear from you. If not, I wish you nothing but the best. Thanks for joining me on this presentation. Bye-bye.